Welcome to today's market report. European stock rose on Wednesday after Swiss luxury group Richemont and chip equipment maker ASML gave encouraging earnings updates, while investors hoped for a big US fiscal relief package as Joe Biden takes over as the next president. The Pan-European STOXX 600 index gained 0.2% in early trading. European bourses mirrored an upbeat mood in global markets after US Treasury Secretary nominee Janet Yellen called for a big fiscal spending by underlining the need to help the pandemic-stricken economy. Luxury stocks gave the biggest boost after Richemont posted a 5% increase in quarterly sales, led by strong growth at its jewellery brands in Asia Pacific and the Middle East. The group's stocks rose 4.8%, rival Swatch Group gained 2.9%, while Britain's Burberry jumped 4.4% after earnings update. Germany's Hugo Boss added 4.6% after Mike Ashley-led Frasers said it boosted its stake in the company. ASML Holding's MVE rose 2.1% after it posted better than expected sales for the fourth quarter and said it had seen a strong order intake for 2021. Italy's FTSE MIB outperformed after Prime Minister Giuseppe Conte won a confidence vote in the upper house Senate on Tuesday, allowing him to remain in office after a junior partner quit his coalition last week. A downgrade of the global oil consumption outlook by the IEA overnight was not enough to dampen spirits in oil markets, who remain target fixated on the proposed US fiscal stimulus package to the exclusion of all else. Brent crude rose 2.05% to $55.85 per barrel. The WTI jumped 1.8% to $53 per barrel. Gold was up thanks to a weaker dollar and comments from Secretary of the Treasury nominee Janet Yellen calling for more COVID-19 relief spending, helping to lift the yellow metals appeal as an inflation hedge. Gold futures were up 0.51% at $1,849.60 per ounce. On the FX front, the sentiment around the pound remains buoyed by the upbeat UK CPI figures, with GBP/USD holding the higher ground near 136.70 levels. The major adds 0.28% on a daily basis. The CPI came in at a plus 0.6% in December when compared to the 0.3% booked in November, while beating expectations of 0.5% print. The pair boot on this week's solid rebound from the 135.20 region and gained traction from the second consecutive session on Wednesday amid a softer tone surrounding the US dollar. The market bets for additional US fiscal stimulus increase further following Yellen's confirmation hearing that urged lawmakers to act big on COVID-19 relief package and not worry too much about the debt. This comes on the back of the optimism over the rollout of vaccines for the highly contagious coronavirus disease and remained supportive for the underlying bullish sentiment. This in turn was seen as one of the key factors that undermined the greenback's relative safe haven status. Home Secretary Priti Patel said on Wednesday that it is too premature to discuss when the COVID lockdown will be lifted. Eurodollar has been advancing after Yellen's speech. President-elect Joe Biden is inaugurated later in the day, and his first actions in office are set to boost both outweighing ECB worries. The ECB is set to leave rates unchanged, but may warn about the higher exchange rate of the euro. Without cutting rates, any attempt by the ECB to talk down the common currency will likely be futile. It is reported that the ECB could launch a strategy of controlling yield spreads. While lowering returns on European debt may weigh on the euro, it would lower borrowing costs for some governments, a positive development. Germany extended its lockdown through February 14th, while Italy's government survived its political crisis. The common currency is somewhat dragged down by the slow pace of vaccinations, especially as Biden intends to ramp up America's immunization scheme. Resistance waits at 121.80, which capped euro-dollar last week. It is followed by 122.25, which was the peak back then. Support waits at the former triple bottom of 121.25, then by the round 121. The dollar index was down 0.2% at 90.278. Dollar yen was down 0.1% at 103.75, ahead of Bank of Japan's latest rate-setting meeting on Thursday. Aussie dollar was up 0.6% at 0.7736. This is today's market news. Thanks for listening. We'll see you next time.